Hey, if you're working on starting a cleaning business or have an existing cleaning business and need to create a set of financial projections, perhaps to get a loan from a bank or raise capital from investors, then this video is going to be really helpful to you. We're going to take you through the process of creating a set of financial projections for a cleaning business with our specific cleaning business financial projection template, which I've linked to in the description of the video below. But we're going to walk you through step by step and show you what startup costs could look like, what your common operating expenses are going to look like, and then ultimately what your profitability and cash flow for your cleaning business can look like, and how to enter in those assumptions for your specific plan. My name's Adam Huxema. I'm the co-founder of ProjectionHub, and we've helped thousands of entrepreneurs and startups create financial projections, typically for investors or lenders. I'm going to dive into the spreadsheet template now and just show you around. So the first thing you need to know is that every cell throughout the spreadsheet that is highlighted in this light blue is an assumption that you can change. And so we're going to set up, say that our projections start here in January of 2022. And we're going to say that you're personally investing $10,000 to help with the startup costs here in month 0, meaning the start month of the projections. We are also probably just going to leave these alone. We're saying accounts receivable terms. Oh, we may make this 50-50. So this would say your customers pay you, let's say half of your customers pay you when you provide the cleaning service, and half you provide terms to you invoice and they pay you within 30 days. We'll also put in, let's say you have $2,500 worth of just inventory, cleaning supplies to get started. And maybe we keep on hand 10% of our next month's sales as inventory on hand. Now, diving into the fixed asset section. So you're probably going to need a van or truck of some sort. And so you can enter that here and put in the value of the vehicle. And we have a life expectancy of 10 years. I just leave the salvage cost at 0 for most of this. And the items will fully depreciate. And then what month will you be purchasing that item? So for these first few items, I'm assuming you're just starting up and you're purchasing these items in month 0. So your van, a computer, and maybe some cleaning equipment. Now below here, I have year 2 vehicles and equipment, year 3 and year 4. So I've kind of bundled some of these fixed assets and expenses in future years. But the idea here is that as your business grows, you have the ability in the template to kind of project, okay, let's say we add another cleaning team. They're going to need a vehicle, they're going to need equipment, and we're going to input that here, and we're just kind of assuming that happens each year we add a new team. So here you can add, I have added month 13 to represent the beginning of year 2, month 25 for year 3, and month 37 for year 4, the beginning of year 4. You can also enter in loans. So let's say we got an SBA loan for $50,000, 48-month repayment terms, 8%, and the payments are going to start right away. This is a startup loan, we'll assume. And you can add more loans in here as well. Jumping over to the input revenue tab. So here we're going to assume that you're going to spend some money on advertising to acquire those customers. And this could really be used for a residential cleaning business or a commercial cleaning business. You can really use the template. It's pretty flexible in that way. And so you might spend some money on advertising, and you're going to figure out over time, what does it cost in terms of advertising to acquire one new client. So we've assumed here that it costs $500 to acquire a new client. Up here we're budgeting $1,000 per month in advertising. So based on those numbers, you're going to bring in about 2 new customers per month through advertising. We also assume that you might have some word of mouth customers. So I've put in 1 new word-of-mouth customer that comes in per month, for a total number of first-time clients at 3 per month. Now here, we're saying that 75% of those first-time clients will become regular clients and use you continually. And they'll be active, regular clients. And then after that, some percentage of those clients will leave. Some of your regular client base may leave, over time, right? And so this row down here will project your regular active clients. Now, what are those clients using you for? That's where this next table comes in. We can put in our different services. So I should say services here. So residential cleaning could be commercial office cleaning, commercial industrial space, or commercial retail space. So there are kind of some different categories of cleaning that you could do. You might be focused solely on residential, and if that's the case, you could just delete these sections here and just say, 100% of your revenue is residential, and that would be fine too. So this field is saying what percentage of your regular clients, of these regular clients up here, will use residential cleaning each month. So basically what this is helping you do is say, okay, 33% of my active clients are going to use me for residential cleaning every single month. And then what percentage of first-time clients will use this service in the first month, in the first month. And then this, you'll put in an average monthly revenue from the service. So for residential cleaning, let's say your average customer is paying you $250 per month. Now, maybe for your commercial cleaning services, your average commercial client is paying $4,000 or $5,000 or $6,000 per month, depending on, what they are. So those are all going to be unique to the services you're providing, how many times you're cleaning, what you're cleaning, all of that sort of thing. In this field, we put in our average cost of labor. And so you can see in the equation up here, what I'm doing is I'm just taking the monthly revenue and multiplying by 0.35. So you're getting that 0.35, which is 35%. So we're saying that labor cost is going to be typically 35% of whatever your revenue is. And so as you bring on new cleaning staff, they're going to be paid out of that 35% cost of labor. And then we'll also have some cleaning materials, disposables and that sort of thing that you can put in here. We've assumed a 5% of revenue cost for that. So between your labor and your materials, we're at a 40% cost of goods sold for the cleaning services. And that can vary depending on your specific cleaning business and situation. Now, if you're doing all the cleaning yourself, you could actually put zeros in here because you're the owner. You don't want to double count what you're paying yourself as the owner and this labor cost here. So keep that in mind. And that will help you calculate your total services and cost of goods sold revenue here. Jumping into our input other expenses tab, you can add just common operating expenses. We've got this pre-filled out with a number of common operating expenses. A couple things to note are you can have the expenses as a fixed dollar amount or a percentage of total revenue. And so here we have these credit card fees as an example. If customers pay you via credit card, then you might expect a 2% of revenue to be paid as a credit card fee. We put in fuel as a 3% of revenue because you're driving around to different customers. And so we're assuming a 3% of revenue cost there. And then employee recruiting and training in the cleaning business is probably going to be an expense for you, especially if you're not doing all the cleaning yourself. So we put in a 7% of total revenue expense there for that as well. Jumping into the input salaries tab, I added supervisors, and you can see that I have them staggered. So the first supervisor starts in month 1, but then we have additional supervisors starting each year at the beginning of the year. And then by the beginning of year 4, getting a regional manager as well. As you add more customers, you may need that. So you can enter in any sort of job position in this on this page as well. And once you get all that entered, you're really done. You've got a full set of projections here. You can see what we have, based on the numbers that we have put in throughout the spreadsheet. You can see we're projecting $263,000 in revenue with a net income, 11% net income at $28,000 in year 1, which isn't bad for a brand new startup. And probably to be expected to have a minimal profit in the first year as you build up. And then, but based on the assumptions we have in here, we really start adding customers and ramping that up over time. You can see net income leveling out in year 5 at 15% and a healthy net income there. So there's a number of different tables and charts and graphs and whatnot. And then some of the key reports you'll need if you're trying to raise capital from a lender or investor is probably your projected income statement, which you can see your 5-year projected income statement here, your projected cash flow statement for 5 years, and balance sheet, and then all of those reports as well, your income statement, your cash flow statement, and your balance sheet by month, each month as well for the 5 years. So that's really it. Again, if you need any help, if you have questions, please leave a comment down in the comment section of the video, or reach out to us directly at support@projectionhub.com, and we'd be happy to help. Thanks.